All right, let's dive right in. Today, we are unpacking a potential major shakeup for India's economy. The government's got a huge overhaul planned for its tax system, and believe me, the ripple effects could be massive for pretty much everyone. So let's break down exactly what's going on and, more importantly, why it matters to you.
Just imagine this for a second. You walk into a store and everything from your toothpaste to your tea is just a little bit cheaper. That, right there, is the core promise behind this whole policy. It's a big bet on getting people to spend more. But why is this so necessary right now?
To really get why this reform is even on the table, we first have to talk about the problem it's trying to solve. And that problem, it's all about consumption. To put it simply, consumer spending is the main engine of India's economy. It makes up about 60% of the country's entire GDP. So when people are out there buying things, the economy grows. When they pull back, well, everything stalls. It's that simple. And lately, that engine has really been sputtering. Ever since the pandemic, the recovery has been sluggish, to say the least. You've got a whole mix of things going on. High inflation, the lingering shocks from the pandemic itself, and some weak monsoons in past years, all of which has put a real damper on how much households are spending. Now, check this out. This slide projects growth for what are called fast-moving consumer goods. Your everyday items like soap and snacks for June of 2025. And it really shows a split economy. While rural demand is expected to bounce back strong at over 8%, you can see urban consumption is lagging way behind at just over 4%. So what's the government's plan to fix this gap? And that brings us to the big idea, a major simplification and overhaul of the goods and services tax, or as everyone knows it, GST. So for anyone who might not be familiar, GST is that single tax you pay on most things you buy in India. It actually replaced a whole mess of different state and central taxes a few years back, all to create one unified market. The Finance Ministry's plan isn't just some small tweak. Nope, it's built on three big pillars. First, fixing some of the structural issues in the tax system itself. Second, what they call rate rationalization, which is really about simplifying the different tax rates. And third, just making it easier for businesses to actually follow the rules. Okay, this is the really crucial part. The whole point of this reform is to move from the current kind of complicated system with 5 different tax rates all the way down to a much simpler 2-rate structure. You'd have a low merit slab for the essentials and then a single standard slab for most everything else. And the stated goal here is crystal clear, as highlighted by the Prime Minister himself. The idea is to directly help out consumers, small industries, and what are known as MSMEs, those millions of micro, small, and medium businesses that are really the backbone of the economy. So what happens if this actually goes through? I mean, a change this big is going to make some waves, right? Well, a recent Morgan Stanley report dug into what those ripple effects could look like. The thinking here is pretty simple economics. When you lower these indirect taxes on everyday stuff, you make them more affordable. And this is a really big deal for lower-income households because these kinds of taxes are what's called regressive, meaning they take a much bigger percentage of income from those who earn less. And the potential payoff? It could be pretty significant. The report estimates this move could boost India's annual GDP growth by 50 to 70 basis points. Now, a basis point is just a fancy way of saying 1/100%. So what we're really talking about is a potential lift of 0.5 to 0.75 percentage point to the entire economy. That's huge. And there's the other side of the coin, inflation. By making things cheaper, this reform could actually cut the annual consumer price index by about 40 basis points. That's 0.4%. That would be a real help in easing the cost of living. This all leads to a cool economic concept called the fiscal multiplier. The basic idea is that a change in tax policy can create an even bigger ripple effect in the economy. The report figures that for every 1% of revenue the government gives up in these cuts, the overall economic output could actually rise by about 1.08%. It's a calculated risk, for sure, but one designed to spark growth. But of course, there's no free lunch. There are always trade-offs. On one hand, you've got the potential for higher growth, lower inflation, and things becoming more affordable. But on the other hand, the government is looking at a loss of tax revenue. And there's also the risk that people might hold off on big purchases, waiting for those new, lower rates to kick in. Now, this is really important to understand. This big GST overhaul isn't happening in a vacuum. It's actually just one of several powerful forces, or tailwinds, as the report calls them, that are all expected to work together to lift the economy. In fact, the report identifies 7 of these tailwinds. You've got the central bank easing its policies, some recent personal income tax cuts, a job market that's getting better, wages growing faster than inflation, strong farm output, and an upcoming pay commission for government employees. The GST reform we're talking about, it's the 5th piece of this much larger puzzle.
Let's just zoom in on that job market for a second. This chart, which is based on projections from a major hiring platform, shows hiring is on the rise. And what's really key here is that this recovery isn't just in tech. It's actually being led by non-IT sectors. And that's a great sign of a healthier, more broad-based improvement across the whole economy. And that's why all this matters. When you put all these drivers together, the combined power is expected to create a recovery that isn't just a temporary blip, but one that's durable and long-lasting. One that helps lift up both that strong rural demand and the lagging urban consumption we saw earlier.
So what we have is a really bold policy move designed to get people spending again. And it's supported by a whole host of other positive economic signs. But it absolutely comes with real risks and trade-offs. Which, of course, leads us to the final, crucial question. With so many moving parts, will this big bet on the Indian consumer actually pay off?